For more on Chinese foreign direct investment, we are joined tonight by Rick Niu. He's the Senior Managing Director at Starr Strategic Partners, who focus on FDI from emerging markets to countries around the world. Thank you for joining us tonight, Rick.
Thank you for having me.
Well, we've seen that China is really ramping its FDI, particularly in developing nations, but we've also seen trends where they're increasing their outflows to the United States. Do you expect that trend to continue?
Well, first of all, when you look at the total foreign direct investment from all countries around the world into the United States, it amounts to about $220 to $225 billion a year. China has been accounting for about $6 billion of that. So on that basis, yes,
small percentage right now.
But the opportunity is very, very significant. Back in 2002, the total Chinese FDI into this country amounted to only a little over $110 million. In 2010, that number already almost reached $6 billion. So the growth rate has been spectacular. So that trend is going to continue.
And we're seeing that currently most of the outflows are coming from state-owned enterprises. Do you see that perhaps we'll see more coming from the private sector in the future? Well,
when we look at the Chinese economy today, actually 51% already comes from the non-state sectors or the private sectors. When we look at the history of China, the country has never been short of very enterprising people. They're very inventive, very, very entrepreneurial. So I expect the private sector and non-state sectors in China continue to grow. They are already becoming a major force of global expansion representing Chinese companies. In fact, 3 of the most successful Chinese institutional investors in this country come from the private sector in China.
So we'll see if that trend does continue. Now,
no doubt about it.
No doubt about it. Okay, well, businesses in China are being encouraged to go global.
Right.
Why is that?
Well, if you're sitting on over $3 trillion on foreign reserve, and you're only investing part of that in, let's say, U.S. Treasuries yielding about less than 2%, you want to do something about that and get the money to work better. And you know, the United States is the world's largest consumer market, is the world's largest business market, and you want to be close to your customers also, longer term. So there's a lot of reasons for Chinese companies who want to be global to be here in the United States. In addition to that, many already global Fortune 500 ranked companies from China really want to expand their global portfolio in order to sustain its growth for the next 10, 20, 30 years. So entering new markets around the world, including industrialized nations, is absolutely critical.
Rick, but there's also the perception among some Chinese consumers and also businesses that it's harder to do business in the United States, that the rules are stacked against them, and they cite often the example of CNOOC's bid for Unocal. There was a failed bid. And do you think it is true that Chinese companies are scrutinized differently than companies from other countries?
Well, I wasn't directly involved in that case, so I probably don't have all the facts in order to comment on that. However, what I would say is that regulators and policymakers and business leaders and political leaders on both sides of the Pacific are trying to really improve the business environments for foreign direct investors. Being pro-business on both sides is very critical. Providing market access to both countries is very critical. Secondly, I would say that it's very important for both sides to really understand each other early on in the process and have a very engaging dialogue and going through a very engaging process. For a Chinese investor doing business in the United States, for example, it's critical for you to talk to policymakers, to regulators, to business partners, to the community, to the media, to the labor unions, to the organizations related to the environmental protection initiatives, to really understand how to do business and be a good corporate citizen here in this country and help America also create jobs. If both sides will work continuously together toward that direction, it'll be a win-win. So
lastly, shortly, just why is it a win-win for both countries?
It creates jobs. You know, in the United States, our economy still faces an uphill battle. All the states are trying to create jobs and retain jobs here. China has huge supply of opportunities coming to this country. So if the two sides work together, it creates jobs for both peoples.
Let's hope that happens. Thank you so much, Rick, for joining us tonight.